Okay, we start now. Good morning, everyone. Thank you for joining us today. My name is Peggy Ware, Business Development Manager of ECOVIS International. It's our pleasure to invite our colleagues to introduce you the tax incentives and frequent tax issues for foreign companies in Egypt, especially for the German companies. Please allow me to introduce you our speakers today. Our Egypt colleague, Salma El-Kadin, and our German certified tax advisor, Sabina Scholz. During the presentation, if you have any question, please put it in the chat box. We will reply you at the end of the presentation. So now it's to you, Salma.
Good morning, everybody. This is Salma El-Kadin from ECOVIS in Egypt. I'm pleased to be speaking to you today. I'm going to introduce you to our best tax practices for German companies in Egypt. I would like to start by briefing you with our agenda for today. I'll start by introducing who ECOVIS is, this is who we are, and then we'll dive into our best tax practices in Egypt, just getting to know Egypt, and then moving more details into the tax incentives and benefits, some tips and tricks. And I'll give the mic to Sabina to be talking about the double taxation between Germany and Egypt. And I'll cap it with some special discount that we're providing for you today and information about our next webinar. So who we are. ECOVIS International is a leading global consulting firm. Its origin is in continental Europe, specifically in Germany, and it has over 6,500 professional staff and employees. We're operating in over 70 countries, and some countries have multiple offices. Our core expertise in business is in tax, audit, accounting, and we provide also legal advice and services. So as you can see, countries highlighted in red are those that ECOVIS has offices and are present in. So we're basically all over the world. More details, as per the accountancy age, we're from the top 20 international networks worldwide. So you can see the top four, the big four, Deloitte, PwC, Ernst & Young, and KPMG, and the list then goes on to the top 20. As highlighted, we're number 15, ECOVIS International, and we're experiencing the highest growth percentage of more than 180%. For our service portfolio, we offer all tax services and consultancy. Just to name a few, tax due diligence, all types of tax returns and tax compliance, tax statements of international employees, and of course, advice on the purchase and sale of companies, mergers, acquisitions, and joint ventures. For accounting services, we also provide bookkeeping, payroll processing, cash flow management, payment transactions like opening bank accounts and the such, and also, of course, financial accounting services, like interim financial statements. For the audit services, just name a few, of course, voluntary and statutory audits of annual accounts, valuation of enterprises, financial due diligence, review of financial statements, and the such. For the legal services, all types of commercial corporate law, private international law, criminal, real estate, insolvency, inheritance, labor, family, and of course, again, matters of management, executive, and supervisory board. And this is our sector portfolio. So as you can see, we're only present in more than 12 industries, and we have expertise even in more. Now let's dive into the best tax practices in Egypt. But I thought of getting you to know Egypt first. So Egypt is not only a touristic spot. It's not only a place that you can go sandboarding and do some adventures in the sea, like Red Sea diving, but you can also visit amazing places like Marsa Alam and Ghouta, and historical places like Abu Simbel and the Giza Pyramid, and cultural places like the Alexandria Bibliotheca. But also, it's a business and an industrial hub. We have a labor force of more than 28 million, a consumer base of more than 100 million. We have the largest gas power generation plant developed by Siemens. We have our 3 cellular networks, mobile networks that cover 100% of the country. and 15 commercial ports that give you access to more than 1.8 billion consumers. And this is also assisted by trade partnerships that we have, agreements, like the Egypt and EU partnership agreement. And the government nowadays is facilitating the investment arena and environment, first by providing an abundance of information. So as you can see, this is an investment map that facilitates for any new foreign investor how to spot new opportunities. And we'll talk in more details about this investment map and how to spot opportunities in Egypt. But it's also amending the legislation concept. There has been an amendment in the investment law, bankruptcy law, and more corporate law. And this led to a 30% increase in the number of incorporated companies compared to last year, and also 65% increase in the capital of incorporated companies compared to last year. So there has been a tremendous leap in this regard. Now let's talk more specifically about these tax incentives and benefits which led to this leap. Basically, it's a new investment law that has been passed in October 2017. It provides two main general benefits, like to all applicable investment projects incorporated after October 2017. The first is exemption from stamp tax and registration fees for any investment project after October 2017. Stamp tax is a tax that levies on all documents processed, mainly and all documents processed by the government, like article of association, loan agreement, land contract notarizations, and such. The second main general incentive is that companies will receive a 2% overall customs tax on the value of any imported equipment and machinery needed for such investment projects. And this is a major leap for the Egyptian government, because nowadays you can easily plan and know ahead any future customs tax that will be levied on your imports. Now let's talk more specifically. The new law provides reduction of total investment in two main areas. So they specified Zone A, they provide 50% reduction of total investment costs if the investment project is located in Zone A. Zone A are specific regions that are underdeveloped or need more investment, and they're specified according to the investment map. The investment map, as shown above, is very easy to navigate. It provides abundance of information for you to spot opportunities. So the government calculates total investment costs by accounting for tangible costs like the cost of land, property, equipment, machinery, and non-tangible costs like property rights, incorporation fees, and such, and also for other cash needed like the working capital. So the cash needed for the first cycle of operation to start. This is all calculated as total investment cost, and the government provides 50% reduction of this total investment cost. How does this apply? It reduces your taxable net profit. You have to pay less taxes, 50% less taxes, and this is a major leap as well. And the other category is Zone B. Zone B are not regions, but industries specified. So if your investment project would be subject to Zone B, you will receive a 30% reduction of your total investment cost. What are those industries? Mainly high labor-intensive industries, mainly more than 500 Egyptian employees. They have to be socially insured to make sure that you can prove by documents that you have more than 500 Egyptian employees. SMEs, investment projects that relate to renewable new energy, electricity, either production or distribution. Any project that will export its output, definitely it will receive a lot of attention from the Egyptian government. Any automobile-related projects, anything related to automobile, not necessarily only production. Furniture, wood, printing, packaging, and chemical-related projects. Also, not only pharmaceutical, but specific in pharmaceutical like antibiotics, oncology, also cosmetics, food production, agriculture, these are very strategic industries, engineering and metal industries, and national and touristic projects. These are to be specified by the Supreme Investment Committee. So if your industries are subject to Zone B, as mentioned, you will receive 30% reduction of total investment. However, there are some terms and conditions, definitely. All those terms and conditions, there are terms and conditions that need to be applied. So the reduction amount should not exceed 80% of paid-in capital. The second point is you have to incorporate a new legal entity to manage the project within 2 years from now. And finally, the company has to keep comprehensive accounting records, which is a basic requirement. And as they facilitate the mode of entry, they're facilitating the mode of exit as well. But to ensure that no investors have to leave, they have safeguarded this with some dispute resolution mechanism. So if guarantees, if look into arbitration, they have an independent arbitration and mediation center to facilitate pursuing the settlement. A ministerial committee will be established to review complaints, and committees within the GAFI, this is the General Assembly that facilitates foreign investment, they will examine the complaints as well. Other safeguards that are mentioned and clearly legalized is now foreign investors will receive the same treatment under law as Egyptian nationals. Foreign investors may now be granted preferential treatment even with the approval of the Council of Ministries, mainly if your investment project is subject to the industry specified above, the strategic industry specified. And investments will not be governed by any arbitrary procedures or discriminatory decisions. They will not be nationalized, and no administrative authority can revoke or suspend the project. And foreign investors are guaranteed residence in Egypt during the term of the project. They have the right to transfer, investors have the right to transfer their profits abroad in such a major leap. There are also investment projects may include up to 10% foreign employees and 20% for investment companies. Finally, foreign employees can transfer their compensation abroad. I would like to end this part with a quote that Dr. Sahar, this is our Minister for Investment and International Cooperation, he has been quoted in Financial Times specifying that now investors can expect reduced bureaucracy, red tape, a clear investment policy, and an easier access to investment opportunities. And as we were talking about foreign employees, now I'll switch to Sabina. Sabina, please take the lead. She'll be talking to you about EXA. Oh, sorry, I forgot to talk about the last part. So these are just few tips and tricks that you can utilize to take advantage of the above incentives that we talked about. So first of all, you have to specify the exact nature of commercial activity within the commercial regime and update it whenever there's any change. So it has to be very specific and not any general term of your industry. And if you do that, you can ensure correct VAT calculation and also tax inspections, and you can ensure to make use of the exemptions specified above from the new investment law. The second point is ensure to only deal with suppliers that provide compliant documents. So as there's a big portion of the economy that's informal, some suppliers may not be paying their taxes, they may not be providing you with supporting documents or taxable invoices. This will definitely affect your accounting records and it will give you a bad image in front of the tax authority if you don't have compliant documents. Finally, a major tip is to ask the tax authority for a voluntary inspection and to follow up on it. So instead of waiting for the tax authority to come and have their scheduled tax inspection, because they may take up to 5 years to come to an investment project, ask for a voluntary inspection. In this way, you will ensure that there are no surprises in this regard. Other investment opportunities that are now in place, the education sector. Because we have more than 60 million students in all educational levels. Also, the government is going through some privatization programs, and of these, there are nearly 150 companies that are to be privatized in the textile sector, as well as some airports. And finally, now the state wants to raise more than $4.6 billion by selling its shares in 23 public companies. And now, back to Sabina. She'll be talking to you about the double taxation between Germany and Egypt.
Thank you, Salma. I would also like to welcome you once again to our webinar, and now I present to you the main features of the double taxation treaty between Egypt and Germany. I would like to start with the taxation of employees.
Salma, can you do the next page?
Thank you. If there is a tax liability in both countries due to domicile or residence, the tax residence must be clarified based on the double taxation treaty. In the following, we assume a tax residence in Germany and a performance of the employed activity in Egypt. If he or she stays in Egypt for more than 183 days, Egypt has the right to tax the income from employment. But even if he or she is in Egypt for less than 183 days in the calendar year, and the remuneration is paid by an employer who is resident of Egypt, or the remuneration is borne by a permanent establishment in Egypt, Egypt will tax the income as well. If these conditions are not met, the income from the employed activity in Egypt is taxed in Germany, where the employee is resident. Please note, however, there are different regulations for directors, pensioners, and civil servants. Would you please switch to the next slide? Thank you. Now we come to the company's activities in Egypt. As in other double taxation treaties, business activities are taxed in Egypt if there is a subsidiary or permanent establishment. A permanent establishment is especially a place of management, a branch, it can be an office, a permanent sales exhibition, a factory, and some more activities, and also a building site or installation if a period of 6 months is exceeded. The profit of a permanent establishment is exempt from the German tax basis, but may be taken into account in the determination of the German tax rate. Another condition for the tax exemption is that the profit must derive from active operations, such as producing or selling goods, giving technical advice, or rendering engineering services. If the business activity in Egypt is carried out by a subsidiary, dividends are distributed to the shareholders, in our case especially to Germany. In principle, dividends are taxed in the country of residence of the recipient of the dividend. Egypt, however, charges a withholding tax of dividends of 10% on the gross amount, but a reduction to 5% is possible. In the case of a direct participation of more than 10%, an exemption is granted in Germany. Otherwise, the imputation procedure will apply. But even if Egypt does not levy any tax on this income or does so at a reduced rate, below the withholding tax rate due to Egyptian investment law, the fictitious withholding tax can be credited in Germany. This prevents the tax relief granted in the source state from being absorbed by the higher tax of the state of residence. This procedure is generally referred to as a fictitious tax credit. I would like to thank you for your attention and give the floor back to Salma.
Salma, you're on. Salma, are you online? Well, okay. Thank you everyone for your participation. So, so far we don't see any question from your side. So, should you have any question, our Egypt office is more than happy to assist you. So please have a look at this page. You can find our email address. If you have any question, please don't hesitate to contact us at cairo@ecovis.com. Or you can find our telephone number here. You can also find our contact details at our website. So thank you very much again for your participation today. We look forward to hearing from you soon. And our next subject for Egypt will be related to transfer pricing or more complicated revenue taxation part. Thank you very much.